Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about EZCORP Inc. Quarterly Report. EZCORP Inc. offers a diverse range of businesses and services through its various segments. The company's primary business involves providing pawn services, including retailing merchandise, such as collateral forfeited from pawn lending operations and pre-owned items purchased from customers. The company operates through three main segments: U.S. pawn, Latin America pawn, and other investments. Within these segments, EZCORP provides a variety of services, including pawn loans collateralized by personal property, jewelry, consumer electronics, tools, sporting goods, and musical instruments. In addition to its traditional pawn services, the company also offers online management capabilities through its EZ Plus web-based application. This platform allows customers to manage their pawn transactions, layaways, and loyalty rewards from anywhere with an internet connection. EZCORP operates under several brand names, including EZPAWN, Value Pawn and Jewelry, Empeño Fácil, Cash Apoyo Efectivo, Guat Prenda, and Maxi Efectivo. These brands cater to customers in the United States, Mexico, and Latin America, providing a wide reach for the company's services. Overall, EZCORP's business model is centered around providing pawn services, including retailing merchandise, offering pawn loans, and operating online management platforms. The stock price of EZCORP Inc. has skyrocketed by over 82.77% in the past year due to a combination of strong financial performance, strategic expansions, and favorable market conditions. One key factor contributing to this growth is the company's impressive financial results across fiscal quarters. In fiscal year 2025, EZCORP reported significant increases in revenue and earnings, with a 9.7% rise in revenue and a substantial 31.91% increase in earnings. This trend continued into fiscal 2026, where the company announced a 43% increase in net income and a 38% rise in diluted earnings per share. EZCORP's strategic expansion and acquisitions have also played a significant role in its stock price growth. The company has consistently expanded its store footprint, adding new stores in key markets such as Mexico. Additionally, it acquired an 87.7% controlling interest in Founders One, LLC, which added 105 stores across 12 countries. Favorable market conditions and operational improvements have also contributed to EZCORP's success. Elevated gold prices have boosted the company's performance, particularly in fiscal 2026. Furthermore, EZCORP has experienced a 14% increase in pawn loans outstanding, PLO, to $314.4 million in fiscal 2026, indicating robust demand for its services. The company's share repurchase program and positive analyst sentiment have also contributed to the stock price growth. The board authorized a new $50 million share repurchase program in fiscal 2026, signaling confidence in the company's financial health and commitment to shareholder value. Analysts maintain a strong buy consensus rating for EZPW, with a positive average 12-month price target. Overall, EZCORP Inc.'s stock price has skyrocketed due to its strong financial performance, strategic expansions, favorable market conditions, share repurchase program, and positive analyst sentiment. EZCORP Inc. maintains a market capitalization of $1 billion, broadly in line with the industry peer group. EZCORP Inc. trades at a higher price-to-earnings ratio of 16 times and a higher price-to-book ratio of 1.34 times relative within the industry. While the stock does not screen as absolutely cheap, mixed valuation signals relative to industry peers prevent a definitive conclusion. With the broader industry trading at lower valuation levels, this may reflect transitional pricing dynamics rather than clear mispricing, warranting further analysis of earnings quality, growth sustainability, and balance sheet strength. The company maintains a moderate leverage profile, with liabilities making up 47% of total assets, suggesting a balanced approach between risk management and capital efficiency. Average liabilities have increased over the past 5 years, which is normal for a growing company. Asset and equity growth have outpaced liabilities, suggesting balanced and healthy expansion. Shareholder equity has expanded consistently over the past 5 years, with growth supported by rising operating income. This suggests the company is profitable and financially sustainable. The share count has increased over the past 5 years, while revenue has continued to grow. This suggests the business may rely on shareholder dilution to fund expansion. Investors should closely monitor whether growth can eventually be sustained without dilution. The income statement shows that the company have been growing its revenue annually and the operating income have been increasing. This shows that the business model works and the business is expanding. The primary drivers of revenue growth for a company are multifaceted. One key factor is merchandise sales, which saw an increase of $128,800 in U.S. pawn and $57,543 in Latin America. Additionally, jewelry scrap sales also contributed to revenue growth, with increases of $15,498 in U.S. pawn and $1,234 in Latin America. Furthermore, pawn service charges played a significant role, rising by $87,876 in U.S. pawn and $29,176 in Latin America. These drivers collectively indicate that the company's focus on merchandise sales, jewelry scrap sales, and pawn service charges has led to substantial revenue growth. The absence of any mentioned decline drivers suggests that these areas have been successful in driving revenue upwards. The net income of a company increased significantly from $31,016,000 in 2024 to $44,304,000 in 2025, representing a substantial growth of 43%. This increase can be attributed to various factors. Firstly, the improvement in profit margins played a crucial role in this growth. The net income margin rose from 9.7% in 2024 to 11.6% in 2025, while the operating margin increased from 13.1% to 15.8%. The gross profit margins also witnessed significant improvements across different categories. Merchandise sales saw a notable increase of 170 basis points, BPS, from 36.7% to 38.4%, while jewelry scrap sales experienced an even more substantial rise of 1,140 BPS, reaching 34.2%. The gross margin on merchandise sales and jewelry scrap sales also showed considerable growth, increasing by 380 BPS and 1,218 BPS respectively. Several factors contributed to these improvements in profit margins and net income. One key factor was the increase in gold prices and jewelry purchases, which drove up jewelry scrap sales and margins. Additionally, higher average pawn loan (PLO) values led to increased pawn service charges, further boosting revenue. However, it's worth noting that increased labor costs contributed to higher store expenses, which may have offset some of these gains. Nonetheless, the overall impact was a significant increase in net income and profit margins, with improved operating results from the U.S. pawn and Latin America pawn segments also playing a role. The company is experiencing a significant improvement in its operating cash flow. For the 3 months ended December 31, 2025, net cash provided by operating activities reached $39,146,000, marking a substantial increase of $13.2 million from the same period in 2024. This represents a year-over-year growth rate of 51%, indicating a notable improvement in the company's ability to generate cash from its core operations. This positive trend is a significant indicator of the company's financial health and stability. A strong operating cash flow allows the company to invest in its business, pay off debts, and return value to shareholders through dividends or share buybacks. The increase in operating cash flow also suggests that the company's management team is effectively implementing strategies to optimize its operations and improve profitability. Overall, the company's ability to generate positive operating cash flow is a key factor contributing to its financial success. The company's debt level has undergone significant changes over the past year. While long-term debt decreased by $157,163, consolidated debt increased by approximately $26,361,000. This increase in consolidated debt is a notable change, indicating that the company's overall debt burden has grown. In terms of interest expenses, there are two contrasting trends. On one hand, interest expense as a whole increased by 159% from $3,147,000 to $8,166,000. However, net interest expenses actually decreased significantly, from $3,149,000 to $13,000. This discrepancy suggests that the company's debt restructuring efforts may have led to lower net interest payments, despite an overall increase in interest expense. The performance of various segments and regions within the company can be analyzed based on their revenue and segment contribution. The U.S. pawn segment stood out as a top performer, achieving the highest revenue at $269,760 and segment contribution at $70,733 among all segments/regions. This segment also demonstrated significant growth in revenue, increasing from $368,668 in 2024 to $430,846,000 in 2025. In contrast, Latin America pawn performed poorly compared to U.S. pawn, although it had the second highest revenue and segment contribution at $112,259 and $20,139 respectively. Its performance was not as strong as that of U.S. pawn. Furthermore, while its revenue increased from $105,637 in 2024 to $136,953,000 in 2025, it experienced a decline to $136,539 by September 30, 2025. The other investments segment also underperformed, with the lowest revenue and segment contribution at $0 and $2,786 respectively. This indicates that this segment did not contribute significantly to the company's overall performance. Management is optimistic about the company's outlook, citing improved operating results and increased revenue. The acquisition of Founders One, LLC is expected to be immediately accretive to earnings and contribute significantly to financial results. This deal will expand the company's presence in the U.S. and internationally. The company has outlined 3 strategic pillars: strengthen the core, cost efficiency and simplification, and innovate and grow. Management anticipates that these initiatives will drive growth and improve operating efficiency. The company also plans to provide $156.4 million in funding through a senior secured debt facility with SMG. In terms of cash flow, management is confident that operations and cash on hand will be sufficient to fund ongoing operations for the next 12 months. However, the company continues to explore acquisition opportunities, both large and small, as part of its growth strategy. This includes planned de novo store growth and strategic investments. Overall, management's outlook is positive, with a focus on driving growth and improving operating efficiency through strategic initiatives. Concerns about inventory buildup are evident in the recent data analysis. The company's inventory has seen a significant increase, with numbers rising from December 31, 2024 to September 30, 2025. This trend is further supported by the substantial increase in provision for inventory reserve in 2025 compared to the previous year. Moreover, the value of inventory has also increased, jumping from $199.5 million in 2024 to $253.4 million in 2025. These statistics suggest that the company may be facing issues related to inventory buildup, which could have implications for its operations and financial performance. That concludes the financial summary for EZCORP, Inc. Feel free to comment below, and I will be happy to answer them when possible.